3 videos, 3 financial statements. We read the balance sheet, what FreshMart owns and owes. We decoded profit manipulation, how numbers can mislead. We read the P&L statement, what FreshMart earned and spent. Today, the final piece, the one document that cannot lie, the cash flow statement, the reality check. On the ViewPoint, this is where we find out if everything we read in the balance sheet and P&L statements was actually true. Let us begin. Here is our agenda for today. We will cover the ultimate reality check, then operating cash flow. Next is investing and financing cash. After that, key cash flow metrics. Then the 7 questions tool. Finally, connecting all 3 statements. Let us jump right in. On the ViewPoint, we know a secret. Profit is just an opinion, but cash is an absolute fact. Okay, let us look at the numbers. Notice our starting line here. It is net profit, specifically rupees 456 lakhs. We carry this exact number over. It comes straight from the P&L statement. This is our starting point today. But what does this profit actually mean? You see, operating cash flow is different. Think of it like your salary. Operating cash flow is the real cash, the money that actually hits your bank account. P&L profit, that is just the theoretical CTC. It is simply the number on your offer letter. We need to find the real money. To find the real cash, we adjust. We have to add back non-cash items. Look at the depreciation line right here. We add back rupees 310 lakhs. This is a massive non-cash adjustment. Now, why add it back? Well, think about your personal car. Your car loses value every single year. It depreciates. But does any actual cash leave your pocket? No, it is just a paper loss. That is why we ignore depreciation here. The money was always in the bank. Next up, we adjust for working capital. Look closely at the trade receivables. Customers actually owe FreshMart more money now. The change is negative rupees 15 lakhs. What does this mean? Revenue was booked, for sure, but the actual cash was not received. This is a very common business reality. Imagine delivering a freelance job in March. The revenue goes into your books immediately, but your client only pays you in May. The cash simply comes much later. Working capital adjustments show us this exact timing gap. So, after all adjustments, we see the truth. The final operating cash flow. It stands at rupees 595 lakhs. This is the actual, real cash generated. FreshMart made way more cash than paper profit. On the ViewPoint, we always look ahead. Now we see how the company builds its future and exactly how it funds itself. This brings us to investing activities. Think of this as the builder section. FreshMart spent quite a bit of money here. It shows negative rupees 287 lakhs. This cash went directly into building new stores. Now, do not panic at this negative number. Think about buying a brand new house. Your bank balance drops heavily, right? That is negative cash flow. But you now own a valuable asset. Negative investing cash is actually very healthy. It means FreshMart is building for tomorrow. Next, we have financing activities. This is the bankers section. FreshMart shows negative financing cash here too. Look at the repayment of long-term borrowings. It is negative rupees 200 lakhs. They also paid out dividends, that is negative rupees 45 lakhs. So money is leaving the company, but it reduces debt and rewards shareholders. This is a very positive sign. On the ViewPoint, we like to keep it simple. We distill complex data into powerful metrics you can actually use. The most underrated metric, free cash flow. For FreshMart, it is positive rupees 315 lakhs. We get this by taking operating cash and subtracting the capital expenditure. What exactly is free cash flow? It is super simple to understand. Think of your actual take-home salary. Now, subtract your home loan EMI. That balance left over, that is your free cash flow. It is the money truly available to you. FreshMart clearly has surplus cash for growth. Let us also check the debt service coverage ratio, or DSCR. It sits at a very healthy 2.14x. This means FreshMart is incredibly safe. Imagine your monthly income is rupees 1 lakh and your monthly EMIs are rupees 30,000. Your ratio is a comfortable 3.3x. FreshMart is in a very similar comfortable spot. They easily earn double what they owe their lenders. On the ViewPoint, we equip you with practical tools. Tools you can apply to your personal investments today.
Here is our ultimate 7 questions checklist. Number 1, are they making real money? 2, can they self-fund their growth? 3, are the debt levels safe? 4, are dividends actually paid from profit? 5, can you truly trust the P&L? 6, are they investing in the future? And 7, is their financial strength growing? Seriously, take a screenshot right now. Use this checklist on your portfolio tomorrow. The answers will definitely surprise you.
On the ViewPoint, we have reached the grand finale. It is time to verify the absolute truth. Notice the very bottom line here, the closing cash and cash equivalents. It sits at exactly rupees 210 lakhs. This right here is the ultimate proof. Now let us compare our documents. The cash flow statement closing cash is rupees 210 lakhs. The balance sheet closing cash is also rupees 210 lakhs. They match perfectly. All 3 financial statements are totally consistent. The FreshMart Financial Trilogy is officially verified.
You have now read all concepts related to financial statements of FreshMart Retail Limited. Balance sheet, profit manipulation, P&L statement, cash flow, the reality check. You now know more about reading company finances than the vast majority of Indian investors. Use the 7 questions on every company you look at. Before you go, drop one comment. Which of the financial statements concepts surprised you most? I read every comment on the ViewPoint. Subscribe right now. New honest analysis every video. This is the ViewPoint. See you next video.